Oh, I just pushed it back. Hi guys, Katrina here with K14's Cash Coaching LLC. I haven't been live in a while because, well, COVID, and we've been busy here with all these, I'm gonna move this, with all these kids. So today I'm gonna be going over what are the requirements and what a lender looks for when you are applying to buy a home and get a mortgage. So some stuff is pretty similar when you want to refinance. So us personally, we refinanced our house this month and our payment is going down $200 a month. Thank you. So obviously that's great news for us and our budget, and coming up with, if you had an extra $200 a month just to do what you want to do, that would be awesome. So as I'm talking, Elijah Young Home Loans will be on answering questions that you guys submit on the comments. So I actually just realized I won't be able to see the comments, so I will have to pull up my phone. So, okay, first of all, the main thing, which is something that I work with and on and whatever, is credit scores. So the thing I focus on with my clients are the actual scores, but also what is listed in their report. So say they have collections or late payments. Say they have, student loans that are so much and they're just accruing interest every time. Those type of things. So just be aware of your score. So think about it. If you have a low score, say under 600, do you really think somebody is going to want to give you a home loan? No, probably not. So let me turn this off. That noise is annoying. Okay. So no, because your creditworthiness and how much you're capable of paying back loans probably isn't very supportive of what they're seeing in your report and with your score. So to be safe, I want all my clients to be at 700 or above, so there will be no issues with the lending, no issues with the underwriting and all that. So credit scores, that's one thing they're going to look at on your report. Another thing that a lot of people don't think about, because they think, oh, I'm a first-time home buyer. There's first-time home buyer programs. They're going to pay my down payment. Okay, that's great if you can qualify for one and get one at the time that you're wanting to buy a house. Awesome. But in the realistic world, you need to come to the table with something, because if you have nothing in your bank account, $0 in your checking and savings, that looks really not good to a lender, because then they're thinking, okay, well, what if the water heater goes out and they need $700? How are they going to pay for that? They're going to have to put it on credit, which means they're going to have a payment that's not listed currently, and they're supposed to be paying our mortgage. Not good. So there's that. Okay. My brother-in-law is on. He said his son turned it on. What credit score do you need to get a home loan? Okay, good. Elijah's on. I was trying to see the comments. Okay, so let me put this here. Okay, Elijah, what score? 620. Oh, gosh, 620. 620 minimum score right now because of COVID. Usually 580 for FHA, 640. Minimum credit scores for down payment assistance. So 640 is the goal, right? Like I said, I appreciate that he is on. He wasn't able to be here live. He had some emergency issues, but I appreciate that he's on here answering these questions. So go ahead and ask away. So his answer, as a home lender that looks at your stuff and really, dives into the breakdown of if you are worthy of a mortgage, really, 640. Because of COVID, normally 580, which that's not good enough for me as a credit, fixer, helper, repairer, whatever you want to call it. So I set my clients up for success for the long term. So we're not just fixing their credit so they can qualify for a house. We're fixing their credit so they have good money management skills that they can continue after they're done with me, right? Because I don't want them to just come back and be like, oh, I need help again. No, we already fixed this. We're not doing this again. So I wanted to set them up for success and let them know this is your life now. You're not going to be the norm of bad credit or late fees and all that. No, we're not doing that. So that's one thing to look at. If Elijah can jump in and let me know the DTI. So DTI is debt to income ratio, DTI. So the way the DTI works is they take your gross pay, not your take home, but your gross. So your total checks before everything comes out, and then they see if you can afford the house and all your debts. So if you have credit cards, a car payment, student loans, personal loans, whatever else you can come up with, if those things are reporting, then they're counting against you on a monthly basis. So I have a client, she has over $780 a month in student loan payments. So $780 plus her $600 car payment, right? She's already at almost $1,400 just in 2 bills that are not a mortgage. So just think about maybe paying down some debts, getting rid of that stuff, squashing it, so then all you have is your house payment. Your car's paid off, student loans are gone, no credit card payments. So then it looks to you like you are the optimal person for them to give a loan to, because the only payment you're going to have is your house, right? So that's a good one. Okay, Tina's saying, I'm trying to refi with cash option. Is a 635 decent enough, or should I keep working on it more first? My goal was 670 minimum initially. Okay, next question. Oh, thanks. Girl, I put up tape real quick. Everybody's fine. It's fine. Y'all know me. It's good. Everything's fine. This is why I have my man doing this, but he was busy doing the dishes like a good boy, so whatevs. So I have a crazy setup right now. I have my webcam on the back of the chair, right, attached to my computer over there, with my monitor over there to see if I'm even in the frame. Okay, it's a little bit behind. How long do you have to work at a job in order to use that as income? Good question. Elijah, you can answer that in the messages, but I would say 2 years in the same job. So for me, when we refied this house this month, I was not able to count my K14's Cash Coaching LLC income because I've only been in the business for a year. So next year I would have been able to count all of last year's income and all of this year's income. But they said, no, it won't count because as self-employed you need 2 years. So I'm not sure if it's the same for like 9-to-5 jobs and people with like actual paychecks that are not commissioned like myself. So he's saying FHA allows up to 56% DTI in some cases. If that was loud, it was supposed to be. Max for a conventional loan is 50%. Max for down payment assistance right now is 48%. So go ahead, do your math. You would want to be a 680 or higher for a refi. Perfect. So keep working on it, girl. Is a 745 score, 1 credit card I rarely use, and I live with my mom. Okay. 2 years work history. Perfect. Does not have to be the same job, just 2 years of employment history. Good. Because when I was working, I was freaking out because I had switched school districts as a teacher. And so they were like, no, it's the same field. You're good. You've been in the same field for, 7 years. You're good. I was like, oh, okay, good. But, oh, gosh, I guess I can just keep my phone in my hand. Also, since being out of work due to COVID, I am going back soon, but will that also be a problem? Because you're going to have a missing income for months or whatever. So how does that work, Elijah? Okay, so DTI. So us, when we bought this house, was 21%. So to see an acceptable 56, 50, or 48% DTI is nuts to me, because I would not be comfortable having so much debt and having to pay for my house, which is the main priority, of all of your debts. Your home should be your first priority over your car. You could buy a new car over your student loans. You can pay those later, obviously if you can pay your payments, but this is crazy. 745 is solid. Yeah. If you come to the table with a 745 credit score, he would love that. Okay. So income, he answered that. Now, let me see. Okay. So when you apply for a mortgage, they're going to look at your W-2s. How many years, Elijah, of W-2s? They're going to look at your employment history, so your paycheck stubs. They're going to look at your account balances. So how much do you have in checking, savings? How much do you have in money markets, in your IRAs, in your retirement accounts, in your 403Bs for teachers, in your 401Ks? So they're going to want to see all that because they want to know how much you're worth. Like, your net worth and make sure that you have money and you're not just, you know, oh, I have captions. Sweet! That's new. Clearly I haven't done this in a while because, again, COVID. So, oh, I'm scratching my legs. I'm a little bit behind you guys. So, okay. Down payment assistance, that is definitely an option. So if you are a first-time home buyer or you are looking for a refinance, Elijah is definitely a great resource to reach out to because he coaches you through the whole process. He lets you know what needs to be done. Like I've been sending clients to him that I'm working with credit because they want to buy a house in the next year. So I'm saying, okay, look, this is what we're working on. Let's ask him what he's going to look at so then we can focus on those and set you up for success the best way we can, right? Because everyone's situation is different. I don't have student loans. My husband never had student loans. So we are not that $30,000 to $150,000 in debt with student loans, right? So thank God we both got our bachelor's with no debt. So that was awesome. My mom too, she's helping. Okay, perfect. Does anyone know where to find? Okay, that's not about housing. So please keep it to housing questions for home lending. Okay, Elijah, what's something you can tell us about the interest rates? I know for a fact we are paying way too much of an interest rate on this house. And we had, you know, 780 credit scores. So I was paying a 4.187. I know it's so embarrassing to say. But now we're going to be at 2.85, right? So that drop over a point lower over the course of 30 years, yes, it does poop because I started my loan over, but my payment every month is $200 less. So it ended up working out for us. It works for our family. You know, it might not work for everybody else, but hey, let me tell you, this mortgage is going to be a lot easier to pay than the other one, right? So market rate right now are low threes. Okay, perfect. So I'm even better. Sweet. 2.85. Love it. Okay, interest rates. So can you talk a little bit about PMI, which is private mortgage insurance, or MIP, which is mortgage insurance protection? MIP. I don't remember what MIP said. They changed the name, but basically what it is when you buy a house, if you do not put 20% down, 20%, not 5, not 3.5 like a FHA and conventional, you need to put 20% down to avoid paying that PMI. Now that PMI for us personally in this house was $147 a month. So as soon as I hit my equity above what my loan was and we had enough equity to delete that, I was like, nope, get it off. Take that PMI off. So it ended up saving us $150 a month on the PMI, right? Which is awesome because that 150 does not go to your principal, so it's not paying down your home loan, and it doesn't even pay down your interest on your loan, right? It literally goes to the government or whatever, and yeah, so it goes to, what I call it is like a fake account. It like goes somewhere and it doesn't affect you or anything. It's kind of like the HOA, which, you know, HOA it does have its benefits, but it also is really annoying to pay that every month. So how can you build your credit score? Is it by paying off debt? So that is a great question. It depends on your situation. So if you have credit cards, right, and your credit cards are 75% maxed out, so you have a 750 balance on $1,000, you're almost maxed out. Like, to me, that's unacceptable. Anything over 30% is way too much. I like my clients to stay under 7% utilization, if not at 0. So on $1,000, that would be under $69 per month of a balance to carry over, if not paid off, because it just shows good credit worthiness. It shows that you are able to pay your bills off. It shows you're not carrying balances, and it makes it look like you're not in debt and can't keep up with your bills. I wish we had waited. Ours with 820 credit score was 3.5 in March. Oh, how were you supposed to know though? You know, we almost did it also around that time that you were doing it. So I was like, we should look into these rates. They're even lower, da da da. I mean, you have no idea to know what the market's going to do. You know, you don't know with COVID what's going to happen. We don't know the future. We don't even know if the kids are going back to school. That's a whole nother ballgame. Don't get me started. But 820, okay. PMI is the worst, yes, but if you go conventional, you're able to refi out of it, which only will cost you the amount of an appraisal, which is like $400. So if you think about it, that's 3 months of me paying my PMI. We refied out that, and it was gone. It was gone. So as soon as you gain that equity, which you will quickly because you bought a new build and they're already going up every time they release lots, you're good. You're gravy, girl. Can you explain that a little more? Do we need the PMI or is it required then? So I don't know, Tina, are you refining? I feel so dumb looking at my phone. See, now I'm getting confused with people. Yes, refi with cash out. So the cash out option is going to have a higher rate than just a straight refi, because we contemplated. I was like, look, we have over $100,000 in equity in this house. We could easily take money out and be good. But I'm like, why don't we just refi? Like, don't touch the cash. Don't owe more on our house than what we already do. You know, I'm like, we're good. So, Mr. Elijah, can you explain that again? Can you explain that a little more? Do we need the PMI or is it required then? So on a refi, I'm not sure. That's a good question. But on a regular house, if you go buy a house for $300,000 and you don't come to the table with $60K down to put down, that's 20%. If you don't have $60,000 to put down on a $300,000 house, you will pay PMI. And it's a percentage of the house price. So obviously the cheaper house, the lower the payment. So this house was $284. We put money down, so we ended up paying $150 a month. I don't know how they break it down, the percentage though. Yes, refi. Okay. Is a single person able to buy a house? Yes. I actually know a friend. She bought her house by herself with only her income, and she's a boss. So it is actually two of my friends. It is very doable. It is definitely an income-based thing as well. So you have to make a certain amount in order to qualify for a certain amount of house. Because even my husband, he makes pretty good money, and he was the only one on the loan for income. They used my credit, so I'm on the loan as well. But we qualified for up to $300,000 at the time. He makes more money now 3 years later, and he works overtime, so we could have qualified for more house. But luckily, where the market was, it was still kind of more lower than it is now. It was lower than it is now. So this house right now is, like I said, over 106,000 more than it was when we got it. So if you've been out of work due to COVID, it really depends. And if you can prove you're going back to work at full pay. Thank you. And yes, I will be able to prove that when I get back to work. I have 200,000 equity in my house. Looking at my next move, possible a new big. Don't do it. Just keep your house. I'm just kidding. So what year did you buy that house? Because if you have $200K in equity, you must have bought it like right after the crash when it was like $80,000 like my sister did. What is my yearly income requirement? Depends on how much house you want. So, I mean, as a teacher, fresh out of college, with I want to say I had $34,000 salary at the time, we did not qualify for a $180,000 house. So you can't find a house less than $200,000, really, a good house that actually has some size to it with at least 3 bedrooms. That I can find that's worthy, that isn't going to need, not hundreds, but thousands of dollars on upgrades and fixing and repairs and paint and, plumbing, electrical issues. So it's depends on your, 2010. Okay, that makes sense. Yeah, you definitely have equity. I mean, we had equity. We bought ours in 2013. So a few years later when the market was starting to go back up, barely. So we walked away with 110K on our last house too. So check out my YouTube video. It's called Katrina's Home Experiences or something like that. K14's Home Experiences. I don't know. But I talk about my 3 houses that I bought. This is our 3rd house. We contemplated buying a 4th, but I talked him out of it, and I talked myself out of it because when we went to look at the model homes, they had went up $5K a week later and then $10K a week later after that. So $15,000. So had we signed that first day we looked at the models, I'd have been set because I would have had $15K in equity in 3 weeks. But nah, I'm not paying the higher cost on that. One good thing about Arizona is that you actually have school choice instead of being chained to the district you live in. Perfect. Yeah, we're on a variance because the school district near us isn't as good as the one that we have our daughter at. So And my oldest did online last year, so she's going to do online again this year. So I'm hoping, even though we're on a variance, we'll still be able to get a laptop, a Chromebook for my youngest, my middle child, because I don't want her on my computer all day. I gotta get to work, right? I was making about $34,000 annually, bought my house on my own for $126 3 years ago. Nice. See, that's what I'm saying. Boss moves. Listen, we are doing the most as females. We are awesome. Elijah, what do you think of when you see charge-offs versus collections and all that on your end? So when someone comes to the table and they have collections or charge-offs, do you think, oh, this probably isn't a good fit, we can't approve this loan? Or is it like, you know what, this was 3 years ago, I'm gonna let this one slide? Like, how do you guys even go about that? Not even these tiny new builds on Northern? Maybe. I mean, it's all about the price. So you need to find out how much house you can afford. Rent the house and have it offset the income, then buy a new home. Rent that. You know what, Elijah? You need to go. And I hope my husband does not read this, because I'm going to be really upset. Okay, I'm sorry. I know it's rude. I'm keep on looking at my phone. I'm not being rude, like having a conversation. Thanks for telling me about my sign, though. Collection should be settled or paid off. You know what? Charge-offs aren't counted against CTI. Good to know. So charge-off versus collection, that is a touchy situation. So a lot of things change in a few years for the charge-offs. Yeah, perfect. Okay, so can you, sir, Mr. Elijah, I feel like I'm just talking to the camera, can you talk about the down payment assistance? Is it just a pool of money that's able to go towards people who've never purchased a home, and then once the money's gone, it's gone? Or do you get on a wait list? Like, how does it work? Well, he answers that. So charge-offs versus, see, I'm asking this for my clients, because if they have charge-offs or collections, I want to be able to advise them correctly. I don't like either of those on there, so I just fight both of them. But that's me. So okay, so lending, so you need your credit scores up tip-top shape, so 640 and above will affect your interest rates. You need to have a good down payment, at least 3.5%, if not more. DTI, make sure you start paying off all your debts, because if you come to the table, listen to me, we came to the table with nothing. Like, I didn't even have my car yet, like the credit cards were paid off. So the only debt we had was this, okay? So if you come to the table with all the checks that he's going to be looking at, credit scores, down payment, DTI, income, W-2s, employment history, paycheck stubs, account balances, like all of those things he's going to ask for. He needs copies of them. It's not just, oh yeah, I got $600,000 in the bank. You know, he's going to be like, but let me see the proof. Like, send me that screenshot or print that out and send it to me. They don't just trust you. So you need to have the documentation ready and set up. So even us with 780 plus credit scores, I was at a 793. Even us with good income, with no late payments ever in our payment history, 100% on-time payments for the last 16 years I've had credit. What else? We had good income, we had good credit scores, we had 10% down payment, because we put down $30,000 on this house. Like, we came to the table with a lot of good things. It was still stressful. So let me alleviate you, let me relax you. Home buying is definitely an amazing experience. It is so gratifying. You own your own home, you own your own land. You are the American dream. You made it, right? That's what we as Americans and humans have been taught, that we should own our own home, whatever. It's the taboo, the norm that we are expected to do. So even with us being able to do all those easily, it was still stressful. So give yourself some grace, give yourself some patience, some time to, just calm down. They need a new paper. Because what happened was, my printer was in the, what is it called? Where you put stuff? Storage unit. So my printer was in the storage unit, and we did the new build. So in January, we signed the paperwork. I'm sorry, in November. And then, excuse me, in June when we moved in, they wanted everything again. And I was like, what? ¿Cómo? I'm like, no, 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 no. Everything's in the storage unit. I don't have that stuff anymore. I already gave it to you. Why do you need it again? Well, obviously they needed new paycheck stubs and those type of things because it had been 7 months. It's a new build. So they were like, is he still working? Like, I need to know that he's still making income. So I was like, oh my gosh. So he had to reprint them out. So the end was stressful because it's closing time. They're on a timeline. You're on a timeline. You're about to get keys for your house. You want to be able to get keys the day that you're able to get into your home. Same thing for them. They want to close this house for you too. The sooner they close, the sooner they can move on to the next one. So it's just a timing issue. So make sure you give yourself some grace and all that too. Next, let me see. Okay. Oh, I got a lot to read. 5% of collections are counted towards DTI. Listen, that's not much. That is not much. There are two types. Some are continuous programs that never run out of money. The others are special programs that can run out of money. Listen, he is the one to go to. If you're a first-time home buyer, reach out to him, hit him up on Facebook. He can leave his information in the comments. You can find them on Facebook, because even if you just have questions, it doesn't hurt to ask. It doesn't hurt to say, this is my credit score right now. This is what I have in debt. What do you suggest I do? He will let you know, and then guess what? For helping you out for free, you are going to go back to him because you trust him to help you and give you accurate information that will help you qualify. So I've been sending my clients to him. If there are questions regarding lending that I don't really know the for sure answer and I'm not going to speak out of turn, I send them to him. I'm like, look, go ask him, tell him your situation, let him see your credit, see what to do. I don't like either of those on there either. Oh, girl, I know. Home Plus and Home in 5 are grant programs that are continuously funded, no wait list. If you qualify, you can use the program. What do you need to qualify? Certain grant programs do have limited funds too, like Pathway to Purchase, that do run out, and timing is everything. I'll private message you. Okay. Down payment assistance is not exclusive to first-time home buyers. Listen, that's the stigma, I feel like, that, oh, I'm a first-time home buyer, they're going to pay $10,000 in my closing costs. I'm like, oh, wait, they could do that for everybody? Let me find out. Okay, that's a long text. Okay. You can have owned a home prior. Okay. Most programs don't let you own multiple properties and get assistance, but if you sell your home and do not own a property, you can still use a program to buy your next home. Good info. Thank you. See, I told you I was going to learn something tonight. I'd like to know more about buying a foreclosure and what's needed. So I would like to know about that too, because I plan on having multiple properties and renting them out. So be grateful for when you hit milestones too. Exactly. Gratitude will help in the long term. You guys got this. Yes, and I'm grateful that I have a house that is big enough for us. We have 6 bedrooms and there are 5 of us. So each of my daughters have their own room. My husband and I have ours. I have my office. And now we have an exercise room, which used to be a mom cave where I would watch Grey's Anatomy for 4 months at a time. Good talk. Super proud. Yeah, so definitely be grateful. Yes, Cass. Sorry. Jeez, don't yell at me. And foreclosures are definitely an option. So I'm going to wrap this up. If you guys have any more questions, hit them really quickly before he goes. Oh, Elijah, what is the difference between a pre-qualification and a pre-approval? I had a friend who a lender told her she was pre-approved. So she went to a realtor. They started looking at houses and found out they were only pre-qualified and they were not able to get a house. So obviously that is extremely frustrating because you're so excited, you're so happy, you're getting ready to buy your house, you're looking at properties, you're getting your hopes up, and then, oh, just kidding, not you, you're not getting them yet. You have to wait. It's like, no, unacceptable. Nothing different is needed as a buyer to purchase foreclosures. It all depends on the seller and what the bank will take. Makes sense. Lisa, you and I will be, thanks for the great information. Thank you, boo-boo. Lisa, you and I will be talking shortly about this, and I have some information for you that will be great. Do I qualify as a first-timer if I haven't had a home in 32 years? Technically, excuse me, technically I would say yes, but like he said, those programs are not just for first-time homebuyers. So you're good. You're Gucci. And if you guys want to leave in the comments the next live training questions, advice, whatever that you still need questions about or that you still need answers for, go ahead and leave those in the comments because it's been a while and I am ready to get back in the game. So last month was credit building in our K14's cash and credit community. This month is home lending and buying your home and all that. So works out perfect. Elijah says pre-qualification is something that lenders issue after checking credit and income. Pre-approval has gone all the way through underwriting and you have been fully approved for a loan. Got it. You're considered a first-time buyer again after 3 years. Yeah, so you could have got 11 houses by now. Wait, 10 houses. What about a loan to build if you already have the land? How would that work, Elijah? So she has property, I think 2 acres, Joy, 1 acre, something like that. She got some land, and they already have a house on the land, but she wants to build like another house in the back. There's a lot of space still for more house, but would she just say like, oh, I need 200,000 to build this, and then they go through the lending process to do the construction? Is that how that works? How does that work? If I'm looking for a refi, should I go with my original lender or look for another lender? Okay, Reba, that is a great question. I know personally that answer. Okay, 1.5 acres. So Reba, I shopped. So I asked multiple people. I did not let them run my credit. Do not let them run your credit. So I did not let them run my credit just because I didn't want all of those hits and all those inquiries. So supposedly in the credit game, in the field that I work in, supposedly if you shop around and run your credit multiple times at different places, it counts as one, right? But what I've noticed in the future is that it is listed as multiple inquiries on your report, right? So I had one client, they went to buy a car, and so they got one loan for one car, and their credit score was ran 15 times. So right now, currently, on their credit report shows 15 inquiries that their credit was ran. Unacceptable. I don't like 1, 2, 3 is the max. But 15? Oh, I was livid. I was like, this is nuts. And it was like different car dealerships, and it was one dealership that they went to, and they signed for one time to run it, and they just kept running it. So I just asked. I said, look, here's my score. What rates do you guys have? Which technically they should all be similar or at least close, but I noticed that some lenders were able to get me a better deal than others. Either they it was no money out of my pocket, or it was a lower rate, or whatever have you. So I called 4 different lenders, and not one of them ran my credit until I picked the one that I was going to go with, right? So just, do what you got to do. Yes, construction loans are available. Get it, girl? The process is more involved because you need to have quotes and contractors, but can be done. Yeah, so you probably have to do your due diligence, figure out your floor plan, get somebody to draft it, get your permits. It sounds like a whole process. I purchased a home prior with my ex-husband. Am I considered a first-time home buyer if I purchase a new home on my own? What is the timeline? Because he said it had to be 3 years. Joy, super location, convenient, and a nice lot. For construction loans, you will need plans, contractors, quotes, etc. That's what I'm saying. Let's make it work for me. Inquiries from the car. That wasn't you, it was somebody else. But yeah, the land itself is worth a fortune. Facts. Especially when we get Fry's out here and Costco's here, and once they put a darn Harkins theaters, you hear me, Harkins? Damn Harkins. If you currently own a home, you would not be considered first-time homeowner. So she does not own it currently. She does not. They already sold it, I believe, because she's living elsewhere. So for the refi, should I do if it's less than 1% savings? You know what, Reba? That is up to you and your family. It made sense for us because it was such a huge difference. If I were to even go down 1 point, I still would have done it. So if they would have got me even a 3.25, which wasn't even a full point, I still would have done it because that's still $115 or something for us. So it's still $100 less, and yes, over time it will pay for itself, but we plan on paying ours as if it was still that when we can. The extra 200 to the loan or to my car or whatever we want, to vacations, you know, somewhere. The money's going to go somewhere, so that way we don't get used to just, here goes $200 every month, right? My hand gestures are killing me. 4% battery, sorry. It's been 5 years sale of previous home. So yeah, you should be good. So this has been an extremely long one. I hope you guys had a great time watching me dance and entertain you. And yes, go ahead and hit me in the comments of what, it says 9 seconds. I hope that's not true, that everything got recorded. So, okay, I'm jumping on at work. Yay! So yeah, go ahead and hit me with the comments if you guys have more comments. And I have to I'll actually take you guys over there with me. I didn't, my computer is so loud. Okay, in live video. Oh, thank you guys, and I will see you next time.